All right, guys. Good evening and welcome back to Accurate Pips. This is a continuation of our true SMC trading uh, webinar. So today I'm presenting to you lesson number 7, and in lesson number 7, we are going to be looking at the candlesticks. Okay, so we use candlesticks to interpret price movement and information quickly and from just a few price bars. All right, so we are going to dive into details to see what these candlesticks are and how they are formed. But before I get into the lesson today, remember, if this is the first time you are watching our lesson on Accurate Pips YouTube channel, do well to subscribe to the channel and don't forget to turn on the bell notification icon. Also, this particular True SMC trading sessions are sponsored by Accurate Pip and Deriv. Okay, so Deriv is a broker that I use and I recommend it to you guys to use. The link to Deriv is in the description of this video. Do well to click on that link and sign up on Deriv, where you'll be able to trade any kind of asset at all. Deriv is a multifunction broker. You can trade options, you can trade currencies, you can trade metals, indices, and also you can trade their own derived assets, also known as synthetics. So do well, register with them and join us in this forex journey. So now let's get into today's lesson. So as I said, we are looking at the candlesticks today, and in the beginning of the video I said that we use the candlesticks to interpret price movement and information quickly and from just a few price bars. Okay, so what candlesticks does basically is that they display information about an asset's price movement. That is the opening price, the closing price, the highest price for the period, and also the lowest price for that same period. All right, so if you see on your screen here, I have what we call the bullish candle and the bearish candle. Okay, so the bullish is represented by the green color, and I represent the bearish candle by the red color. So what I just talked about right now basically is that we have this anatomy of the candlestick. Okay, so now basically the point here, okay, for both candles is known as the highest price of the candlestick. Okay, or in other words, the high of the odd of the candlestick. Okay, then the between the high and this area where I wrote bullish candle close, where the candle closed, and the high of this bullish candle is referred to as the upper tail or the upper wick of the candlestick. Same applies to this. Now the difference here is that in the bearish sense, it is between the highest price and the open of the bearish candle. So the bearish candles open on top and close at the bottom. So this is the close of the bearish candle. Meanwhile, the bullish candle opens at the lower section and closes at the upper section of the price chart. Okay, why? Because in the bullish sense we are buying, so we are moving up. Buying means we are going up, selling means we are going down. So to sell, price opens above and then falls and close below, and to buy, price opens below, rises and closes above. Right, so take notice of that. Now the solid section of both candles is referred to as the candle body. Okay, it's referred to as the body of the candle. Now, as I said, this is the open of the bullish candle, but for the bearish, this is the close of the bearish candle. So this between the open of the bullish candle to the lowest point, which is here for both, the lowest point for both. Okay, so between this open section of the bullish to the close, to the lowest price, is the lower tail or the lower wick of the candlestick. And when you come to the bearish, it is from the odd, the close to the odd to the lowest price. That is the lower wick of that bearish candle. Now, how these candlesticks are formed is the next thing we are going to be looking at. Okay, now let me just state this before I go to the formation. Okay, so when we take the open and the closing prices, okay, what does that mean? So the open and the closing prices of the candlestick are shown by the body. Okay, as I said, you see, is the body here that shows the close, and the body here that shows the open of this bullish. The body here shows the close, sorry, the open, and the body here shows the close of the bearish candle. But when we take the highest price and the lowest price for the same period of that candlestick, this is shown by the shadows on top and bottom. Okay, the shadow is another name for the tail. Okay, so the upper tail and wick is also known as upper shadow. Okay, so the tip, the very top of it, shows the highest price, and the very low of it shows the lowest price of the candlestick. Okay, all right, so now let's look at the formation of the candlestick. How are they formed? So the candlesticks are formed in two different scenarios. Okay, based on two different scenarios, whether bearish candle or bullish candle, they all use the same pattern of formation. Okay, so I'm just going to use one to do the whole explanation, and then you can, based on that explanation, you can apply it to each and every other how they call it, types of what, candlestick, whether doji, harami, or whatsoever be it, hammer, is the same sequence of formation that we see in the market. All right, so let's look at the diagram. All right, let's look at the diagram. So here we have the formation of candlesticks. All right, now you can see this is the high, the close, the open, and the low, because this is a bullish candle, and this is the sequence one or pattern one. Okay, the formation pattern, and this is the sequence two or pattern two, the formation in terms of the formation. Now when we take sequence ones, for instance, this sequence shows us two small movements and one big move. All right, so how does this occur? Now what happens is, this is the open. Okay, so when price open, there is a small decline from that open price to create the lowest price. Okay, then after that we then see a sharp move. That is the second pattern, that is the second movement, all right, of this pattern or sequence. So we then see a sharp move, all right, from the lowest price to create the highest price of the candle during that period. After that, there is a little decline from the highest price to create the close of the day. All right, so that is the first sequence. Now what this sequence teaches us is that the internal move, okay, the internal move of this particular candle that will move this way is bullish move. Okay, so this sequence portrays strong sustained buying pressure and will be considered more bullish. All right, a movement like this is what portrays what, a strong sustained bullish buying pressure. Okay, the buying pressure is so high, all right, that the sellers couldn't withstand the pressure and are not able to what, to push price down. When this happen, we consider this particular candle as more bullish. Okay, so a candle's body can be bullish, that is green, but then internally, or based on the movement of the based on the internal movement of the candlestick, it will be considered bearish. Okay, though the color is green, the internal movement will cause it to be kind of what, bearish. Okay, because the selling pressure then is going to be what, it's going to be high. All right, so let's look at the second sequence. So if we take the second sequence, uh, unlike the first sequence that shows us two small moves and one big or one sharp move, the second sequence shows us three sharp moves. Okay, it shows us what? Three sharp moves. Okay, so the first move is a sharp advance, okay, from this open to form the highest price, and just after forming the highest price, then we see another sharp move down or a sharp decline, okay, to form the lowest price for that same period. Once that is completed, price then creates a sharp advance move, okay, from here, from the lowest price to give us the close of the day. All right, now this sequence reflects more volatility in the market and some selling pressure. So though this is a bullish candle, internally it is not totally bullish because there is high selling pressure in this case, and that makes it more balanced or kind of a ranged type of what bullish candle. All right, so these are the two ways or two patterns by which or sequences by which all candlesticks are formed. All right, so for my assignment, which is a reading assignment, I want you guys to go and read on the following candlesticks, okay, because they are so important that you know them. So I'm talking about the doji, the types of doji, the engulfing candle, that is both the bullish and the bearish engulfing candle. Read about them. The book I gave you on the page, that is the Candlestick Bible. You can get all these candlesticks types there. We have the harami, the hammer, the shooting star, the evening and morning star, the hanging man, dark cloud cover, and the piercing candlestick patterns. So read about them. I'm not going to talk about them in this. Is a reading assignment, so do well to read on these particular candlestick patterns. Guys, this brings us to the end of this particular lesson. I will see you in class on Thursday. Do well to join, and if you have not joined our Telegram channel, do well. I will leave the link to all our groups and channels in the description of this video. Do well to join them and be part of the community. Be active and always ask questions. I'll see you. Don't forget to subscribe to the channel and turn on the bell notification icon. See you next time.